Hey, welcome everybody. This is Mark Dannenberg. This is the Options Moneymaker in New Cycle Trading and Analytics, Aurora Trading System Education, Session 2. So just as a refresher, in Session 1, we did an overview of the Aurora Trading System. We talked a little bit about the structure of the system. We talked a little bit about our purpose in designing the Aurora Trading System. And we talked specifically about one of the three primary entry methods. That was the Pb3. We also talked a little bit about building a personal trading plan and how important that is, and putting all of this together to build a what I would consider to be a substantial potential income for yourself here for the next 12 months. In Session 2 here, we're going to be talking about the Pb35 signal, Pb35. It is one of the three primary signals that we use as an entry and exit strategy within the Aurora trading system. So just as a refresher, the Aurora trading system, the way it's designed, consists of three time frames. There's a 3-minute chart on your left. There's a 5-minute chart in the middle. There is a 10-minute chart on the right. So we use those three time frames. Sometimes we're using an individual time frame, like you learned in Session 1, that we use an individual time frame of the 3-minute in order to get into a long or short position. And we use two indicators. There is what we call the PBA, and there's the CXA. The PBA is this upper range of blocks, red and blue blocks, and the CXA is this lower range of blocks, red and blue blocks. I've had a couple of questions about the white bars. You can ignore the white bars, just view the white bars as the same as though there is no red or blue box at all. There are three primary entries. There's a Pb3, which you learned in Session 1, and then we're going to discuss Pb35 in this session, Session 2, and then we will discuss in Session 3 the Pb13. And also, just as a refresher, these trades are broken into what we refer to as catch trades. Pb35s and Pb3s are catch trades. They are a system design that allows us to capture profits either between trends or perhaps add profits while in a trend. And then the Pb13 signal is a trending trade. Those are trades that we are looking to capture a bigger profit, stay in and hold for a longer period of time. And we manage those trades, you're going to learn in Session 3, with some very specific criteria to make adjustments, to lock in profits, to reduce our risk, and to ultimately hold for a potential 50 points of profit. But we'll get into the rules and specifics of Pb13 in Session 3. So in today's session, we're going to talk about Pb35. We're going to define it for you. We're going to help you understand how to recognize an entry. We're going to talk about the parameters that we use for stop and profit target parameters. And we're going to talk about some management strategy and tips around the Pb35. Now, one thing I want to do here real quick before we jump into this is I want to remind you that if you go to newcycletrading.com/Aurora, I'll take you to this page. And if you click on education, we have put together a list of supporting education tools for you. So in Session 1, we talked about fractals. I'm going to be referring to fractals here in Session 2. If you're not familiar with fractals or you need a little refresher on them, we have an instructional video on fractals. That's a free video. We are going to talk a little bit tonight about the Infinity Trading Dome. Infinity Futures is where we trade. That's the broker that we use for our futures trading. And we have put together an instructional video on using the Infinity Dome. And then you, if you have no experience with futures, but you like what you see in terms of the Aurora trading system and would like to follow along with us in our live trading room and take advantage of the profit potential, would like to learn a little bit more about futures, we're offering you the futures education at no charge. And of course, you can at any time review the Aurora Trading System education, and we'll talk a little bit later about the personal trading plan. And then if you haven't subscribed to the Aurora system yet, there's a link there to do that. So just wanted to remind you that all of this information is available to you, and it will support some of the items that we will be talking about here in session 2. So as we noted, the Pb35 entry is a catch trade. So it's a catch trade. And what it is allowing us to do is to get into a trade that all of the underlying indicators that we have positioned behind the primary PBA and CXA signals are indicating a high probability of a move in a particular direction. That move could be between trends, so it might be an early entry, it might be catching a move while we are not in a trend. It could be an early entry into a trend shift, or it could possibly be an entry that is a counter trend signal. What we're doing with a Pb35 is we are using the 3-minute chart. We're looking at the PBA signal on the 3-minute chart. And in this case, we are using the 5-minute CXA signal, and we are looking for alignment between the 3-minute PBA and 5-minute CXA. In order for us to have a qualified entry for a Pb35, we are going to look for the 3-minute PBA and the 5-minute CXA signals to be aligned, and we're looking for the first alignment of that. We're going to show some examples here. It'll be a little clearer. I'd like to give you the definition first, and then we will show you some examples on the chart. You're going to enter a Pb35 trade at the open of a 3-minute or a 5-minute bar. So when we say the open of the bar, when we're looking at a 3-minute chart or a 5-minute chart, you've got all these price bars, and each one represents 3 minutes or 5 minutes. So when a new 3-minute bar comes on the chart, if the signal, the Pb35 signal, is showing alignment between PBA and CXA in the first 3 seconds of a new price bar, then that is a valid signal. So on our trading here in the Aurora system, and it was true with the adaptive entry system also, we are looking for our signal to be valid within the first 3 seconds of a new price bar. So if it comes on right at the open of the bar, it's valid. If it comes on 1 second later, 2 seconds later, or 3 seconds later, it is valid. The majority of the positions that are valid are going to come on at the open of the bar or within 1 second of the open of the bar. That's the majority of them, but within 3 seconds is still a valid signal. When we're trading Pb35 entries, we have a default stop of 20 points off the open of the bar. And we have a default profit target of 10 points off the open of the bar. Now, this should sound familiar to you because these are the same default stops and profit targets that we presented with the Pb3 in session 1. If we have a default stop of 20 points, but we see that there is a fractal on a 5-minute chart that allows us to reposition our stop to the fractal and have less than 20 points of risk, that would be our choice. We're not arbitrarily adjusting the stop. We aren't just saying, hey, I only want 10 points because that's what I'm comfortable with. We've done no research on that. I'm sorry, I'm going to say that differently. We've done a ton of research on that. We have zeroed in on 20 points because that appears to be the optimum level of stop setting that we've identified. When I said we've done no research on that, what I mean is that once we finalized our rule set, and you've heard me discuss this, we finalized our rule set after many different iterations of rules and combinations of signals. We finalized that about mid to late September of 2021. And since October 1st of 2021, we've been doing all of our data tracking based on that final rule set. So our data tracking since October 1st of 2021 always reflects a 20-point stop or a 5-minute fractal stop. It does not reflect an arbitrary, I want to use 6 points, I want to use 10 points. And I'm trying to emphasize that because there are traders who will get a little nervous, especially when they're first trading. They're afraid of losing. And so rather than trading the system, they start to interfere with the performance of the system by adjusting things that they think are actually going to reduce their risk. And just as an example, what could happen is if you're a trader who's a little nervous and you decide to adjust your stop to 10 points because that makes you more comfortable, it's not uncommon for you to be taken out for a 10-point loss, but the price movement never gets to 20 points that we initially set as our risk. And then the price moves favorable and results in a 10-point profit. You end up with a 10-point loss because you thought that that was going to be a lower risk, but what you really did was you interfered with the integrity of the system. And we have thousands of trades that have verified these settings. So I'm going to show you an example here of setting a fractal. Again, I did that in session 1, and again on the newcycletrading.com/Aurora, and then choosing education, there is a free fractal training that you can download and view on demand. So once again, we're looking at Pb35 signals to catch an early entry into a trend shift, or possibly to add more profit opportunity to an existing trend. So our exits are going to boil down to the following. And these exits, these strategies for exiting are all based on bar open. 10-point profit target is hit. So we'd be out of the trade if it hits 10 points, if the price movement hits 10 points off of bar open. If you have slippage, I want to address slippage here again, as I did in session 1. Don't get preoccupied with a small part of the trade. You might have 2 ticks of slippage. You might have a point of slippage. If you were really slow in clicking yourself into the trade, or there was a sudden and abrupt move right at the open of the bar, maybe you have 2 points of slippage. It doesn't matter. I want to emphasize that. It doesn't matter. You are still going to scroll your dome, and you are going to set your profit target at 10 points off of whatever price that bar opened at. So let's just say in an extreme case, you have 2 points of slippage. You're going to set your profit target at 10 points off the open of the bar, which means if when it hits that price level, you end up with 8 points of profit. Yeah, you didn't get 10 points, but slippage is just part of this game. Slippage is part of this game. And I'm going to emphasize this a bit more when we look at the personal trading plan later. You can build a personal trading plan for yourself with a very, very strong profit target goal and a very strong overall profit accumulation for the year. And you can accommodate the expectation of slippage into your plan. So 10 points off the open of the bar is your profit target. 20 points off the open of the bar. If it hits that, you're out for a loss of 20 points. It might hit a fractal that would give you less than 20 points of loss, and we'll emphasize that when we pull up the chart here. You would only be using a fractal if placement at the fractal, upper or lower fractal, gives you less than 20 points of loss. The other method of exiting out of a Pb35 is when you have an opposite 3-minute CXA at the open of the bar. An opposite CXA at the open of the bar, you're going to close the trade. You also will close the trade if you have an opposite PB3 or an opposite PB35. And in that case, you are reversing the trade. So this would suggest that you have a PB35 in place long, and then all of the rules are met and there's a qualified PB3 that comes on short, you would abandon the long PB35, you would close it, and you would immediately go short based on the PB3. And the same thing would be true if there was a short PB35. So we're just following the sequence of the market. So we mentioned in session 1 that objective of designing the Aurora system was to, when we encounter a choppy period, we can navigate our way through that chop. And in that navigation, we might accumulate small profits, we might accumulate small losses, but going through the chop isn't going to be generally a big negative for our account. And so what might happen here is you're long on a PB35, and a few bars later, you have a short PB3 or a short PB35. You're going to take a small profit or a small loss on the PB35. You're going to reverse it so that now you're short. And if you're short on a PB35 and a few bars later, you have a long PB3 or a long PB35, you're going to reverse it again. And you might take a small profit or a small loss on that trade. If an opposite PB3, 3-minute PBA, right? So PB3, if an opposite PB3 comes on mid-bar, so that means it did not present itself in the first 3 seconds of the bar open. If that comes on mid-bar and then it ends up printing, but the next bar opens blank, you're going to hold the trade. You're not going to reverse, you're not going to close. One last thing here is that if you have a situation where the 3-minute PBA comes on blank, and at the same time, the 5-minute CXA is blank, essentially what that means is that the signal that put you into the trade initially has gone away. You're going to close the trade. So let me say that again, because it's not on the slide here. If you have a blank 3-minute PBA at the open of a bar, and when that 3-minute PBA comes on blank, there is a blank CXA on the 5-minute, you're going to close the trade. So you're going to close it when you have a blank alignment between the 3-minute PBA and the 5-minute CXA, and you're going to close it and reverse if you have a reversal, a qualified reversal on the PB3 or a PB35, and if you have an opposite 3-minute CXA at the open of the 3-minute bar, close the trade. So a little bit more involved set of rules for closing than we have on the PB3, but relatively simple to follow. And once you trade it, excuse me, once you trade it, you'll get used to it. Okay, a few other points here. Some of these are similar to what you learned in session 1, but they are worth emphasizing. Pb35 is a catch trade, which means our default profit target is 10 points off the open of the bar. One of the worst feelings as a trader when you're trading the system is your profit gets to 9 points, 9.5 points, even 9 3/4 points, and it doesn't hit 10. And then it comes back and takes you out for a loss. That is a horrible feeling because you really were just, 2 to 3 ticks away from, 1 to 3 ticks away from hitting your 10-point profit target. So we have made it a practice now that when we get to 9 points or more of profit off a bar open, we consider inserting a 5-point profit stop. That guarantees us 5 points of profit, and I'll usually insert the 5 points of profit off of my fill, not a bar open. And that just ensures that, if it never moves that extra 1, 2, or 3 ticks to give us 10 points, that you're not left holding the bag with a loss. We've seen this happen many times, and it can be a little annoying if you didn't capture it quickly, but it is in a category of, it's not really what we define as a rule. It's just more guidance for you as an independent trader. The question really you're left with is, would you be happy with 5 points if it avoided you having a 20-point loss stop out? I think the answer is yes. Now, if you've been an experienced adaptive entry system trader, we're not talking about when the profit gets to 5 1/4 or 5.5 points and you quickly tuck a 5-point lock in there. We're not talking about that. We're talking about if it gets to 9 points or better and hasn't hit 10 yet, just tuck a 5-point profit stop in there so that you protect yourself from having a loss. It doesn't have to be 5 points. It could be a break even. It could be 2 or 3 points. 5 points is kind of the guidance that we're providing to you. And then it's entirely up to you whether or not that's something that you want to do. We've seen trades most every day that will get to 9 1/4 or 9 3/4. And if you don't lock in 5 points, about half of those will end up hitting 10, and the other half end up hitting 5. Now, to be fully transparent, when we are tracking trades in our database, we do not track the locking of 5 points. We either hit 10 or we hit 20 points of a stop out, or we see a reversal. So basically, when we're tracking, these are the rules that we're following to track. If on our live dome, we decide we're going to lock in 5 and we take 5 and it goes to 10, in the tracker, we're recording 10. If on our live dome, we decide to lock in 5, it never hits 10, comes back and hits the 20-point stop out, we record a 20-point stop out. So I believe that in the tracking that we do, it's ultra conservative and actually understates the ultimate performance opportunity of the system. Another thing, if the 3-minute PBA stops printing, but the 5-minute CXA is still valid. So let's say you were long, you had a 3-minute long PBA, and you had a 5-minute long CXA. If the 3-minute PBA stops printing, but the 5-minute CXA long is still present, you hold the trade. So going back to our rule set, you're looking for an opposite alignment between a PB3 or a PB35 to get out of the trade, or you're looking for a 3-minute opposite CXA at the open of the bar to get out of the trade, or you're looking for both the 3-minute PBA and the 5-minute CXA to be blank. But if you have, if your 3-minute PBA is gone, is no longer printing, but the 5-minute CXA is still present, you hold the trade. Now, we discussed this next point in the live trading room more today, but if the previous 3-minute bar is 50 points or more, consider skipping the trade. So I just want to add a few comments about this. The whole premise of the 50-point bar is to say, if you have these impulse moves, and ours was, our guidance was based on regular market session open, 9:30 and the first 15 to 30 minutes. If you have a big bar on a 3-minute chart, there's a high probability that you're going to get some sort of reversal on the next 3-minute bar. And that reversal could be a simple 20 points, which would not be the entirety of the bar, but it would be enough to stop you out. So a point of clarification is when you're looking at a Pb35 entry, because the Pb35 will sometimes be triggered off of a 5-minute CXA, what bar are you using on the 3-minute chart to determine whether or not it meets the 50-point rule guidance? So let's just say we have a 50-point bar on the 930 bar, and now the 933 bar is printing, and at 935 we see a possible entry for a Pb35. I'm not looking at the current 933 bar. I'm not looking at the current 3-minute bar. I'm looking at the prior 3-minute bar. So it can be a little confusing when you're looking at your entry being triggered off of a 5-minute bar. The 5-minute bar is going to tell you to get in, and it is the prior, not the current 3-minute bar that's going to tell you whether or not you want to consider that 50-point guidance. So the 50-point rule is not, I'm going to say that differently. The 50-point guidance is not a rule. It's not a rule that you absolutely have to follow. It's more of trader discretion. We do not generally track in our database those trades that present themselves after a 50-point or greater bar, because we just see so many of them fail. The few that you'll see that you'll get into that will work out and give you really nice profits will mislead you and make you believe that that's going to happen frequently. But especially in the 9:30 to 10 o'clock time frame, right after regular market session open, there can be a lot of heartache and anxiety over these trades that present themselves, and they reverse and take you out for 20 points, and then they actually give you what would have been 10 points of profit. So hopefully that is clear on the 50 points. We had several questions about it today. We designed it, like I said, originally for the first half hour after market session open, but the 50-point bars do occur on other news-driven items. So today we had 50-point bars triggered by some 8:30 news, an hour before regular market session open. And again, it's entirely your discretion whether or not you want to take that trade. If we identify a trade in the live trading room and say, well, here's a Pb35, we'll do our best to also say, well, but there's a prior 50-point bar, and we're going to leave it up to you to confirm whether or not it's a trade that you choose to take. But to be very clear, we don't track those trades. So all of the performance in our tracking database excludes signals that present themselves, Pb3 and Pb35 signals that present themselves after 50-point bars. Also, you need to wait for a break in the 3-minute PBA signal before entering another catch trade in the same direction. Okay, so let's talk about some chart examples. I'm going to go through 3 examples here, and then I'm going to jump to a live chart. So on January 7th at 9:03 in the morning, we had a 3-minute PBA present itself at the open of the 3-minute bar. Now, what we need in order to have a qualified Pb35 trade is we also need to have alignment with the 5-minute CXA. And we already had alignment with the 5-minute CXA as of 9 o'clock. So 3 minutes before the signal presented itself. So this is the way we would be looking at our charts in real time. We see at 9 o'clock that the 5-minute CXA is showing long. That's not going to put us into a trade. But we also can see that on prior bars on the 3-minute, we have long CXA. So we are prepared at the open of each 3-minute bar to take a trade if the PBA presents itself as long. So that's our preparation. We already have a heads up based on the 3-minute and the 5-minute CXA. We already know we're qualified for a potential Pb35 because the CXA was there as of 9 o'clock, but we need to wait for the 3-minute PBA to present itself to be valid. So in this case, the 3-minute opened at 705 and a half, so 15,705 and a half. You see that down here. And the exit was 15,715 and a half because we're using 10-point profit target off of the bar open. So if you had some slippage, maybe you got filled at 15,706, you would have had two ticks of slippage. You would still place your profit target at 15,715 and a half, and you might end up with 9.5 points of profit, whereas the system is generating a trade that showed 10 points of profit. So we kind of equalize everything and just use open of the bar as our measurement for did we hit 10 or did we hit 20 points of stop. In this case, once I'm in the trade at 15,705.50, I'm going to look to see whether or not there is a lower fractal. It would be a lower fractal because I am long. I'm going to look to see whether or not there's a lower fractal that is less than 20 points away. And in this case, that lower fractal was not less than 20 points away. So we left our stop at 20 points. Okay, here's a second example. At 10:20 a.m. on January 7th, we had alignment between the 3-minute PBA and the 5-minute CXA. So it came on at 10:18, but it didn't come on at the open of the bar. So you might look at this and say, well, why didn't we get in at 10:18? Because we can see that the 5-minute CXA was already there. So at 10:18, when the 3-minute came on mid-bar on the 3-minute, we now need to wait for the next bar to open. And in this example, the next bar to open could be the 3-minute, which would be the 10:21 bar, or it could be the 5-minute, which would be the 10:20 bar. So we're looking for the next first bar, the first next bar to print and confirm the alignment. And in this case, since the 10:18 was a mid-bar print on the 3-minute, it's not a qualified entry. The next bar between the 3-minute and 5-minute that's going to print is the 10:20. So at 10:20, when the 5-minute CXA came on, the 3-minute is still short. That's when we go ahead and take the trade. So in this case, it was the 5-minute chart that prompted the entry into the trade. With a Pb35, it can either be the 5-minute or the 3-minute, whichever one is presenting the first full confirmed alignment between the 3-minute PBA and the 5-minute CXA. Whichever one is first to present a full alignment. In this case, the 5-minute 10-20 bar was the first to present that full alignment. So the 5-minute 10-20 bar opened at 15,681.50. You see that. We are going short. So we're setting a profit target to exit at 15,671.50. That would be 10 points off the open of the 5-minute bar. And in this case, it hit that for 10 points of profit. You can see there was a nice steady sell-off there. Also, when we got in at 10.20 at 15,681, can't really see, I think it's kind of hidden up here, but we would go back and look to see where the upper fractal is. When we're going short, we're looking for an upper fractal. When we're going long, we're looking for a lower fractal. And that upper fractal was further back than 20 points. So we left our 20-point stop alone. If that upper fractal had been less than 20 points, we would have adjusted our stop to be less than 20 points of risk. This is really a great example, and I want you to maybe replay this section of the training to understand that your prompt to take the trade on a Pb35 can be either triggered from the 3-minute or the 5-minute. In the prior example, the 5-minute was already in place, and it was the 3-minute that was the next open bar to confirm alignment. In this second example, it's the 3-minute that is in place as of mid-bar 1018, and it's the 1020 bar on the 5-minute that gives us the confirmation of the signal. And here's one last example before we jump to some live charts. On January 12th at 10:03, we have an alignment. We have PBA, 3-minute PBA, come on at 10:03. But the actual alignment to get into the trade wasn't until 10:05. So this is another example where the 5-minute is the time frame and the CXA is the trigger to get into the trade, because the 3-minute PBA was already in place. So once the 3-minute is already in place and you're looking for a Pb35 trade, you're waiting for the 5-minute to present itself. And at 10:05, 2 minutes after we had our 10:03 bar print, and actually that was the third bar printing, so we are just waiting for the 5-minute to catch up, 5-minute CXA, and that happened at 10:05. So the first time we had full alignment between 5-minute CXA and 3-minute PBA was at 10:05, and we take that trade long. We're going to take that trade long at 958 1/4, 958 1/4, and we are looking for it to get up to 938 1/4, 938 1/4. But let me show you what happened on this. We look at the 5-minute fractal, it's right here, to see whether or not we can improve upon our 20-point stop, and we could not by adjusting to the lower fractal. So we have this trade in place with a 20-point stop. Now, if you're just grazing back and you're kind of looking back in history, you would look at this trade and think, oh yeah, that looks like that was a 10-point profit. But the reality is it moved lower first, and it moved lower enough to take us out at our 20-point stop. You can see here that we were long at 958 1/4. It actually moved down to a low of 935 1/4. 938 and a quarter was our 20-point stop. So it hit our 20-point stop, took us out for a $400 loss per contract, and then it reversed and it went higher and actually went up as high as 995, and then it continued higher on the next bar. These can be frustrating for a trader because I'll get a message in the live trading room that, geez, I got stopped out, and then it went higher and I would have had 10 points of profit. I'm just going to tell you, it's just part of the game, folks. We have a trading system, the Aurora trading system, that is generating an average of over 150 points a day. And that includes these types of trades, where on this particular trade, you know what? You just didn't take a profit on it. You actually took a loss on it. But this is why we just steadily take the signals, we steadily take the trades, and we follow the system. And the system is almost always going to beat out any emotional impulse we have to take any type of other action. So let me jump over to live charts. I've got a couple of great examples for you here. So I'm going to look at today, which is January 12th, 2022. And I'm going to move my 3-minute chart back to around noon this morning. This 1218 bar, this 1218 bar on the 3-minute actually came on mid-bar. And I'm going to scroll back in the alerts log so that you can kind of tie that together and understand how to effectively use the alert log. We had a PBA long. What did I just do with it here? We had a PBA long right here. You can see that it was long at 12, 19, and 27 seconds. That's what we refer to as a mid-bar print. It didn't come on at 12:18. It came on at 12:19 and 27 seconds. So when we see that come on, we are then waiting for the next bar that is going to print. So we know that came on at 12:19 and what did I say? 12:19 and some odd seconds. So at 12:20, we had a CXA long come on at the open of the bar. Let me scroll back here. There we go. 5-minute CXA long at 12:20. So our 3-minute came on just after 12:19. The next bar that's going to print is going to be the 5-minute 12:20. And so at 12:20, we had a verified, confirmed alignment between the 3-minute PBA and the 5-minute CXA. We don't have to wait for the next 3-minute bar. That 3-minute bar was in place when we took the 12:20 trade off of the 5-minute. And here is more of an example. If we took that 12:20 trade off of the 5-minute, I have a pending fractal. The open of the bar was 896.25. That fractal was over 30 points back. That was a pending fractal. So that is not someplace that we would adjust our stop to. We'd have just left our stop at 20 points. And you can see here that based on the 12:20 bar, we moved from 896. We moved down about 8.25 points. First of all, that's what we call a drawdown. And then we moved up to actually almost 20 points on the next bar. So it easily hit our 10-point profit target. Then moving forward on the 3-minute bar, we had a signal present itself at 13:12, so 1:12. And on the 5-minute CXA, it presented itself 3 minutes later at 115. So the 112 was a valid PBA. 115 was the alignment now between the 3-minute and the 5-minute. In this case, the 115 bar printed on both the 3-minute and the 5-minute at the open of the bar. So you have a valid Pb35 trade right there to go short. We're short at 15,907. We wanted to get down to 15,897, and it actually moved down to 893. So there's 10 points, and you had just a couple of points of drawdown. Now at 15,907, your stop defaults to 15,927. So the first thing I'm going to do is to check my 5-minute upper fractal, and that was at 15,953. So it makes no sense to adjust back to that is more like 46 points of stop risk. We're going to leave our stop defaulted at 20 points. So that was another 10-point profit target. Once you start to get into a habit of recognizing the PB3s, which we taught in session 1, you'll recognize that frequently the catch trades present a sequence. And then frequently the sequence runs into a trend trade. So here you had a PB3 trade at 1312. It came on at the open of the bar, give you a nice, easy, clean 10 points of profit. And then on the next bar, you've got a Pb35 and give you another 10 points of profit. So right there in a 3 to 4 minute period, you have 20 points of profit presented by the system. And I'm going to emphasize this because it's actually presenting a great example. After that, we're not taking any more trades triggered by the 3-minute PBA until we have a break. And a break, by our definition, is you have a gap where you have no colorized print. The next time we would consider taking a trade would be the next presentation of either a short or long signal. And in this case, I'm not scrolled to that point on the alert log, but if that came on at the open of the bar, that would be your next trigger to get into a trade. And it could either be a PB3, or if you have alignment with the CXA, it's a PB35. Then you have a gap again, and then there's a long, then there's no gap, but we did reverse into a short. So this is not a gap, but it is a reversal. So you would have been long here, assuming that that hit at the open of the bar. That was a PB3. And then you have a short, which would be a PB3, no conflict with the CXA. There's 10 points. And then you have another short where you have alignment with the 5-minute CXA. So you get 20 points there. And I'm not looking at the alerts log. I want to be very clear here. That assumes that those came on at the open of the bar. And if not, then you're looking at the next bar. So you'll frequently identify a sequence of trades where PB3 presents itself first, then you have a PB35, and then you could actually possibly roll into a trending trade and be looking more for 50 points of profit out of that. So when we really get into a trending pattern, your PB3 and your PB35s are going to come on first, give you an opportunity for 10 to 20 points of profit between those two, and then roll into a trending trade, which may offer you an opportunity for as much as 50 points of profit on that trend. All right, so let's jump to our tracking and look at specific history on PB35s. So I'm going to go to the averages tab here in just a moment, but from 7 to 2, the PB35 trades are averaging $627.35 a day. So that's just over 30 points a day from the PB35 trades. When you combine that with the PB3s and the PB13s, and you're trading the entirety of the system. I've actually got this set here, 7-2. The entirety of the system is averaging just over $3,000 a day. So I'm going to change this setting to Pb35. It's a very powerful tool, thanks to Aaron. We can do all of this evaluation. So just under 32 points a day in general, and of the 66 trading days that we have formally recorded in our database, 13 of those days have been losing days if you were only trading Pb35. I'm going to quickly scan through days of the week. So Mondays are actually almost 40 points just from Pb35, 3 losses out of 14 days. Tuesdays are 13 points. What a big difference between Mondays and Tuesdays. 13 points from 7-2. Wednesdays are an average of about 25 points, 25.25 points. Thursdays are an average of 33.5-ish points. A couple of losing days out of the 11 Thursdays recorded. And Fridays are 48.8 points, so just under 49 points. So clearly Mondays and Fridays are the best performing days in only the Pb35 in our history. Tuesdays are kind of a dog for the day. So that doesn't mean I would change anything. I would still trade the entirety of the system every day. But if you're looking for ways to kind of dissect what you personally want to trade, you can certainly break it down by day of the week and by strategy. So the last, excuse me, the last thing before we get to questions here is I really want to emphasize how important it is to use the Aurora trading system in tandem with a personal trading plan. With the personal trading plan, you can plan your daily risk outside of market hours. You can think about it. You're not charged with emotion as you're in the middle of a trading day. You can plan your personal profit goals. What would you like to achieve over the course of 12 months? Plan what you would like your income to be, and then you can trade towards your income. This is a business, folks. This is an activity that you actually can set whatever profit target you want. And as long as you're willing to make the trades and trade the number of contracts as necessary, you can pretty much achieve whatever income goal you desire. This is going to help you understand when you can add contracts, a thoughtful and methodical approach to adding contracts rather than an impulsive approach. And it gives you a way to track your own personal profit loss performance. And I think it's very important to track all of your losses and all of your winning days so that you kind of see what your overall run rate is. And you can get access to the personal trading plan at this same link, which is newcycletrading.com/Aurora. And you can then click on the education tab and then click on purchase personal trading plan. I'm going to jump to the personal trading plan here just for a moment. I have one set up that is tracking the Aurora system performance. And for those of you who have heard me talking about what's coming up in session 5 next week, this is based on PATS. PATS is an acronym which we'll share in the trading session 5. Trading session 5 will be for paid subscribers, and we're tracking PATS performance. So today, the PATS performance was $1,990 on 22 trades. So by putting in the number of contracts, it's 22 contracts. By putting in the number of contracts, we are incorporating fees and commissions into our future forecast. With PATS, we were done trading at 10:05 this morning. So you can see here, there was one day this week we were done at 8 o'clock. There are other days where we're trading right up until 2 o'clock. Here we were done at 10:48. There's 3 days that we were done in the 1 o'clock hour. But PATS is a way to have a balance between your trading and whatever other activities you enjoy in your life. It's also a way that you can, on some days, outperform the system. I'm going to come back to that comment in just a minute because today was not a day that PATS ended up outperforming. We had a really awesome full 7-2 performance today, but I'm quite delighted with the PATS performance today. So what does that mean? We start with a $5,000 account. We are planning for our winning days to have an average of 120 points a day, where the system is actually averaging 190 points a day on our winning days. We're planning to have losing days where those losing days are going to be 30.25 points. That's right in line with what we've seen. In fact, it's a little overstated, but it's pretty much in line with what we've seen for the system production so far. We are, at least as of right now, planning on scaling up to 10 contracts. The personal trading plan is going to provide that scale for us. It's going to tell us when we should be trading 2 contracts, tell us when we should be trading 3, 4, all the way up to 10 contracts. That's a maximum number of contracts I can set and limit. I could change it to 5 contracts. I could leave it at 1 contract, whatever I choose. So Kristen and I have it set at 10 contracts. Again, 120-point average winning day, 30-point average losing day, and the 12-month forecast, if we were to hit those all those factors on a regular basis, is 4.2 million, having started with $5,000. In the first quarter, it could be as much as 716,000. Having started with $5,000. So you might not be comfortable with 10 contracts. Maybe you're willing to trade as many as 2 contracts. It still is about $900,000, having started with 5,000. If you never want to trade more than 1 contract, but you leave these parameters, which I think are conservative and valid, it still is, almost $500,000 forecast. Now, what your reality is going to be might be a little different. You might be planning for 120 points of profit on your winning days. Maybe you only average 100. Maybe you only average 80. But you can play around with that and you can see whatever it might be. If you only average 100 points and you never move beyond 1 contract, still is almost $400,000. And remember, folks, we're starting with a $5,000 account. So I'm going to reset this. I'm going to put it back to 120. I'm going to reset this. I'm going to put it back to 10. I want the bigger forecast right now because, frankly, if I fall short and I miss it by 50%, I'll be pretty happy at 2.1 million, having started with $5,000. So let me make one last comment here, and then we'll jump to questions. The PATS performance today took us out at 99.5 points. 99.5 points. At the end of the day, 7-2. Let me just make sure I don't have anything. Oh, sorry. I need to change this back to all. So we're looking at the entirety of the system. There we go. So we're looking at the entirety of the system. Today's actual end of day system performance was $4,115. That is if you took every single trade from 7 a.m. Eastern to 2 p.m. Eastern. So it actually outperformed PATS today, which can certainly happen. But if you're trading PATS and you were done at 10:05 this morning, you can decide whether or not you want to continue to trade. We're going to talk about that whole philosophy in session 5, but you can decide if you want to continue trading. On a day like today, if you continue trading and you invested another 4 hours in your trading time, you would have made another couple $1,000. That was probably worth it. There are other days where we are done at a certain time based on PATS, and then the rest of the day is more give backs and, kind of choppy. And so Pat's then outperforms the system. So here's the bottom line for the Aurora trading system and why we're so excited about presenting it to you. We know what our history is, but the history that we've actually been able to demonstrate for you live in the live trading room starting January 3rd is, as of right now, after 8 days of trading, last week we were up 7,700. It was kind of a small week for profit production. So far through the first 3 days of this week, we're up 11,100. So up 18,800 in terms of system profit performance. And if I look back at my PATs, having started with $5,000, we're up to $15,925 using PATs. Either one of those numbers is outstanding. I'm delighted to stop trading at 10 o'clock in the morning and go do something else and still be on a pace to possibly earn as much as $4.2 million. I'm not hanging my hat on that forecast just yet because I think we've got to build a little bit more track record with actual performance and when we decide to stop during the day. But right now, that's the pace that we're on. Okay, in session 3, next session, we're going to be talking about Pb13. It's the same format. We're going to give you definition, what defines an entry, the parameters, and management strategy tips. So newcycletrading.com/Aurora, tons of information there. We've made it all available to you so that you can be successful in building your personal trading business. So what kind of questions do we have out here? Bob is asking regarding parameters, is there a minimum fractal distance you would use? Less than 20, but more than? No, in fact, I like the trades where I can use a fractal that might only be 6 or 7 points away. It means I just don't have much risk on the trade. And we have a lot of confidence, Bob, in fractals. If it's going to break a fractal, it's generally going to continue moving beyond that price point. That's one of the reasons why within the adaptive entry system, we traded fractals, meaning if we had an upper fractal, we would say we're going to go long if it hits that number. And we had a high percentage of those trades that turned out to be very profitable trades. All right, Greg is saying, I'm going to ask Kristen to chime in on some of these. She's, it's like she, I think, dreams about these trades in her sleep. If your Pb35 trade is reversing, if a Pb35 reverse signal prints, but a blank Pb3 prints, hold, close, or reverse. So if you're talking about a 5-minute CXA, and if you're talking about a 5-minute CXA that reverses, you're most likely going to have a reversal on the Pb3.
So, hi, Mark. I'll just jump in. And I believe if I'm reading Greg's scenario correctly, you'd be closing that trade because there'd be a blank print on the Pb3. So if there's nothing on the Pb3, you're not in a trade. You don't reverse on a Pb5 alone.
Right. And if you had a blank on the Pb3, but your 5-minute CXA was still aligned, you'd still be holding the trade. But you're not going to reverse based on the 5-minute alone. Rob, you asked, what does it mean to wait for a break in the 3-minute? I just went through that, so hopefully you saw that, that response. Roe is saying, light bulb moment, understand the Pb35 now. Didn't know about 5-minute triggering the trade when 3-minute midbar. Yeah, makes sense. Yeah, your Pb35 is going to be triggered by either a 3-minute print or a 5-minute print. And I mean, by print, I mean bar open. Whichever one presents itself first that confirms a full alignment between the 3-minute and the 5-minute. Okay, Ron's presenting a scenario here. At 9:54, we enter a long PB3. At 9:55, the 5-minute CXA goes long. Then at 9:57, the 3-minute PBA continues being long. Do we enter PB35? Now we have both PB3 and PB35. Okay, so first of all, we never overlap, we never double up on catch trades. If you're in a PB3 and the next set of signals actually presents a PB35, you're not going to take another trade. The only time we have double trades out there is when we have a catch trade that is on at the same time as a trending trade. So in your scenario, Ron, if you had a PB3 come on at 9:54, if you were out of that trade for 10 points on that bar, and at 9:55 you get alignment, you can get back in based on a PB35. But if you're not out of the PB3, you're not adding another contract. Michael P is saying this is more of a PB3 question. If it comes on mid-bar, we do nothing. But if it still lines up at open in the next bar, do we enter? Yes, absolutely, Michael. If a PBA on the 3-minute comes on mid-bar, you need to wait one more bar open. That bar open could be the next PBA on the 3-minute, which is a PB3 trade, or it could be the next CXA on the 5-minute, which then would put you into a PB35 trade. It's a live account, Gavin. Kevin's asking, you take a PB3 and then a PB35, 2 catch trades, or you need a break between the 2 signals. You don't need a break between the signals, but you won't take them at the same time. Steve is saying, I understand trades are only initiated off a bar open. Is that because you have not researched that, or does research show performance does not indicate a more profitable system using mid-bar? Bar open was a way for us to kind of level set everything, Steve, and have a consistent measurement. To be honest, we haven't extensively dissected mid-bar opens. The problem with the mid-bar open is it could happen 10 seconds after the open of the bar, or it could happen 2.5 minutes after the open of the bar. And so the logic we started to follow with the adaptive entry system was bar open. And we found tremendous success with that, and that's carried over into the Aurora system. So it's one of those areas where when you have your own Aurora system charts and you want to dig in and do some of your own back testing and forward testing around some questions that you have, I applaud the traders who want to do that level of research. We've decided to settle on bar open, and it's made it very easy for us to track. Okay, Kevin is asking about the third example. Could you have entered a PB3 if the signal in the 3-minute came on at the open? Yeah, absolutely. If the signal came on at the open, well, in fact, it probably did here on that would have been the 10 o'clock or the 9:57 bar. Those might have put you into a PB3, and you might have gotten out for 10 points. And then at 10:05, you're presented with the alignment between the PB3, PBA, and the CXA. Tim's asking, does TradingView provide wrong signals for PB3? I mean, within first 3 seconds on a new 3-minute bar. I'm not sure what you mean by that. Can you have a signal that comes on in the first 3 minutes and then goes away? That's not something I would define as a wrong signal. That's just a signal that came on and didn't stick. Yes, David, when I showed the personal trading plan here, this is starting with a $5,000 balance. Carol's asking, since the system has only been around a short time, have you back tested this? Carol, the system has not been around, by my definition, a short time. We have been building the Aurora trading system since August of 2020. The reason that the data in our tracking only goes back to October 1st is that between August of 2020 and late September of 2021, we were continuing to refine the integrity of our rules and our signals. So we had phenomenal performance when compared to the adaptive entry system on earlier versions of the Aurora system. But I kept telling Kristen, I believe that there is more available. And so we were working with different combinations of signals and rules and indicators. And we finally arrived at what we consider to be a rule set that we wanted to fully validate. And so we started recording based on that rule set as of October 1st. But we've got thousands and thousands of trades that we have recorded in prior versions of combinations of indicators and rule sets. And every one of the versions that we worked with was strongly profitable, but this version is optimum. This version has, in my opinion, knocked it out of the park at an average of 150 points a day. And also, when you talk about backtesting, I've never been a fan of backtesting. I think there are inherent flaws in backtesting, but we do forward testing, which means once we arrive at a rule set and a configuration of indicators, we literally sit here and trade, starting in sim, but trade in a live environment on a sim dome, and we record every single trade, which gives us a chance to have discussions about the trade and does our rule set make sense around that trade and how would we modify that? How could we have optimized profitability today, et cetera. So we've done all of this in a forward testing environment starting in August of 2020. Mike R is saying, if I wanted to focus on taking one signal to begin trading, which would you recommend? So I'm going to answer that by showing you the tracker. If you really didn't want to trade the entirety of the system, then where I would focus would be the trending trades, because the average of the trending trades, Mike, is $1,775 a day. That's an average. Whereas the average of the PB3 catch trade is $756 a day, and the average of the PB35s is $627 a day. Now, the PB13, which is the trending trade, is a little bit more complex, not difficult to understand, but it's a little bit more involved in the adjustment of the stop, and you won't have as many trades typically. The catch trades are easy to get used to. You're looking for 10 points or possibly a 20-point stop out. So, you know, I could go either way, seriously, Mike. I'm more of a fan of trading the system, trading all three signals. So I'm more of a fan of trading the entire system. But if you wanted simplicity to start out with, you could take the catch trades. If you want a higher profit potential to start out, you could take the trend trades. No, Steve, those are the trades. Those are this is a list, sorry, right here. This represents a list of the trades that we are identifying for you in the live trading room. You can follow right along with us. Well, thank you for that, Sad. Saying now, if the signal is valid but the price moved, let's say a few points, 5, 10, 20 points, so on, I'm a bit confused about the specific point. Maybe you can explain a point, your method, and right way to enter the trade. So I'm going to pull a sim dome over onto the screen here. Just a minute. I'm going to get aligned here to where we're currently trading. I'll pull a sim dome over here. So hopefully you can see that. First of all, we use a simple bracket order on our dome. This is the Infinity Futures Trading Dome. And we're using a 200 tick profit target with an 80 tick stop loss. So each point is 4 ticks. So this is a 50 point profit target, 200 ticks, and this is a 20 point stop, which is 80 ticks. So let's just say, what direction are we going to go here? We had some long signals. Looks like we have a little bit of a sell-off here. Let's just say we want to go short. I'm simply going to click sell market. I'm going to click sell market to go short. And it puts me in at 15,882.50. And my default stop is 20 points back. It automatically places my default stop 20 points back off of my open. Now let's say this was a valid signal and I had 2 ticks of slippage. I'm going to move my stop back 2 ticks so that it's 20 points off the open of the bar. My profit target is out 50 points. But if this is a catch trade, I'm only looking for 10 points of profit. So if I have 2 ticks of slippage, that means the bar opened at 883. I'm going to scroll down my dome and I'm going to click on the center column here, the price column, on 873. And so what that's done now, it has moved my 50 point profit target to a 10 point profit target. And it's 10 points off of the bar open. And I'm assuming that I have a 2 tick slippage on this trade. So if the price moves down to 873, I will end up with 9.5 points of profit, not 10. And that's because I had 2 ticks of slippage. But I will take that. If the price moves up to 903, I will lose 20.5 points on this. And now I leave the trade alone. And then I'm looking at my signals to see whether or not I have any reversal indications or any close indications. So I hope that helps. I'm going to move that back over here. All right, so I'm going to pull that back over here. Deborah has a really great, appropriate question here. What if I had a signal that tells me I should close the trade? I am short in this trade. You can always confirm whether you're short or long because I'm short and it says -1. That says I'm short 1 contract and the background is highlighted in red. If I was long, the background here would be highlighted in blue and it would say +1. So when I'm short, to close the trade, I want to buy it back. So I would click buy market. If I was long and I wanted to close the trade and not wait for it to hit one of my parameters, I would sell the trade by hitting sell market. So in this case, I'm short. Let's just say there was a signal that came on that said, I don't want to be in this trade anymore. So I'm simply going to click buy market. The trade goes away. I have zero contracts out there, and I just lost 2 points on that trade. It's really very, very simple. Hope that helps, Deborah. Let's see what was going on here. At 2018, there was a PBA short. So that's a PB3. We had no conflict on the 5-minute. And we were out of that for, no, we would still be holding that. 84.5. We needed to get down to 74.5. Outside of regular market session is a little slower, so it doesn't move quite as much. But if it gets down to 74.5, that would be a 10-point profit off of that PB3. It's not a Pb35 because we didn't have alignment. But if you go back to the 2003 and we slide over one at 2006, we have alignment. Actually, 2005. Did that come on at 20? I'll look in the log. 2005 CXA long here. We already had our long PBA on at 2003. So that's a perfect example. You would have taken the trade on the 2005 bar, and you can see here that that moved from 885 up to 896. There's your 10 points on the PB35. Veronica's asking, are the signals based on buying or selling pressure? These signals, Veronica, are based on a whole array of indicators that I've worked with over the years, that Craig and I talked about, that Kristen and Aaron and Craig and I discussed. And so this is really intended to represent a combination and alignment of multiple signals. And it's presented very, very simply in one simple signal that is easy to identify, colorization, and just a simple block. So it's representing a variety of indicators behind the scenes. Artem's asking if I can show a valid example. If an opposite PB3 comes on mid-bar, prints, but the next bar opens blank. I'm not sure I can quickly find that for you, Artem, but if in the live trading room you remind us about that question tomorrow, we'll make sure that when that happens, we'll point that out to you. On non-sticking signals, I think John means when a signal comes on and then goes away. Have you done any work to see how often that happens? I've had a few go away after I entered PB3s today. I also suspect that there's more likely happen around market open. We haven't done work to specifically see that. We tried to keep this, John, as simple as possible. I know that the PB3s today generated $1,400. The PB35s generated $1,655. Well, all of these numbers take into account those signals that it may have come on, we got into the trade, and then the signal immediately went away. So I'm not in a place where I feel like I need to do a tremendous amount of research on those signals, although we're starting to take a look at what the next version of market metric signals beyond Aurora might be. And it might be something we could consider there, but that is that's a sticky one to try to figure out because it's not really easy to measure. It's not really easy to measure because you got to have a signal come on, go away 5 seconds later, come back on, go away 10 seconds later, come back on, and end up giving you a profit. Yeah, so let's pop back to the dome here. Oops. Jack is asking, when you place that 10-point profit target, does the 50-point get canceled? Yes. So what I'm going to show you here is the open orders window. Right now you can see there's nothing there. If I were to go short by selling market, I'm short at 877.25. I'm going to scroll down my dome and I'm going to click on 867.25. And now what you'll see here is that the stop is at 867.25. The only other item I have out there is my 20-point protective stop, which is 897.25. So it immediately replaced the 50-point profit target. So you don't have to be concerned about it hitting that 10-point profit target and you still have another order out on your dome. That said, when you are out of a trade, it is always a good idea to click cancel all just to confirm. But there's a couple ways to make sure you don't have an order out there. And one is looking at your open orders window, and the other is to just click cancel all. I'm such a freak about it and such a habit about it, I probably click cancel all 3 or 4 times after I close every trade. Greg is asking, can you use Fractal in that live example? Let's see here. If I'm short at 877.25, my 5-minute Fractal is back at 896.5. Well, actually, yes. So 5-minute Fractal is at 896.5. I could scroll up my dome and I could just simply click on 896.5. Doesn't help me a whole lot, but yes, it is a valid fractal that I could use to somewhat reduce my 20-point stop risk. Ron's asking, in order to close the trade, couldn't I hit flatten? Yes, I can. But when you hit flatten, it's going to close the trade and it's going to zero out your quantity. I just personally find that using the, here, I'm going to get back into a trade here. We'll go long this time. I find that using the opposite button, the sell market or the buy market, is the most effective way. And that's the habit that I'm in. So whatever habit and routine that you want to use to exit your trade, just get comfortable with it. There, is more than one way to get out of the trade. If I believe that the signal is weakening, I want to tighten up my stop. Let's say, I think that this might be headed against me. I can decide where I want to put a stop. Maybe I want to go down to 78.75 and put a stop in and limit my risk to 3 points. I can put that there. And as the price continues to move up, I could move it up to 79.75 and really dramatically reduce my risk. The ability to click in the center column on that price significantly saves you time in terms of adjusting your stop. And it just came out, took me out. I'll click cancel all, 3 or 4 times. You only need to click it once, but I'm a bit of a nut about that. So Tom's asking, so all the versions perform well during the summer months? Absolutely. All of the versions of Aurora that we had were outperforming the adaptive entry system, AES, but I just kept feeling like there was more available. And so Kristen was digging in, and actually I give kudos to Kristen. She was digging into some signal alignment when I took a few days off to take a break, and I came back and she was pretty excited and giddy, having found an alignment that we'd been searching for that really ended up being an optimum performing method within the system. And so that's where we are. But every version of the Aurora system that we've tested has performed very well. Now, very well to me was we had some versions that were averaging 60 to 75 points a day. We're now in a range where we're averaging 150 points a day. Listen, 60 to 75 was very strong, excellent, and would satisfy most every trader. 150 gives you a lot of bandwidth, a lot of room for deciding when you want to trade, maybe skipping some trades and still perhaps finish 100, 120 points a day. You see that my trading plan on the personal trading plan is based on 120 points a day, even though the winning day average is 190 points. The overall average is just over 150 points. Ron's asking if I ever use the groups B and C in the bracket box. He's referring to this down here. No, don't use any of that. Artem is saying if you have unfavorable slippage in PB3, say 2 points away from entry, that means we don't have a chance to lock in 5 points profit. No, you can still lock in 5 points, because if you have 2 points of slippage, it means that your profit target is at 8 points off of your entry. And so if it gets to 7 points off of your entry, you can still lock in 5 points. It won't hit 9 points off of your entry, Artem, but as soon as you're in the trade, you're managing it based on the bar open. So if it gets to 9 points off of bar open, what I would be doing is locking in 5 points off of my open, so that I'm taking 5 points of profit based on my open. Zach is saying, and we're almost done with questions here, folks, but Zach is saying, Aurora looks incredible. What has been your win-loss experience for catch trades? If you use 20-point stop and 10-point profit, you would need 66 win-loss ratio to break even. Well, I think you're looking at it from a very traditional point of view. Traders get bogged down with the whole language around win-loss. I don't really care what the win-loss ratio is. You can see that overall we're tracking win-loss. I have days where my win-loss ratio, here's a good example, we made $4,300, but the win-loss ratio was 66%. Today, we made $4,100, but the win-loss ratio is 70%. And that's because we have trades that we may have, 3 out of 5 trades. I'm not saying this happens, I'm just giving you a hypothetical, but we might have 3 losing trades out of 5. Well, that's not a very good win-loss ratio, but one of those 5 trades could be a 50-point trending trade, and 3 of those losing trades could lose 2 points, 3 points, 4 points. So I wouldn't make an assumption that you can calculate what the win-loss ratio requirement is in order to break even, because you're making some assumptions that don't exist really in the real world. You don't, the value of a loss when you're evaluating win-loss is not necessarily equal to the value of a gain. And we're proving that. You can scan here and look at the win-loss ratios. We're in the mid-60s. Yesterday, we were at 62% win-loss ratio, but the system produced $4,700 of profit. So for me, Zach, the win-loss ratio is irrelevant. Tom's asking, do we adjust the stop loss off the bar open? Yes. Yes, I would advise that you adjust off of bar open. So if let's see here, what direction are we going to go here? If I go short I sell market. And let's just say I got filled 1 point off of bar open, which means the bar open would be 73.75. Well, I can scroll up my dome and I can place my stop at 20 points off a bar open, which is 93.75. So in this case, if I lose, I might end up losing 21 points. System is going to show a 20-point loss, but I'm adjusting to that slippage. Slippage has been a question that we've gotten forever. And I frankly think that a lot of traders get too preoccupied with slippage and start telling themselves a story that, I can't be successful because I have slippage. They start thinking about latency. They start thinking about all sorts of things other than making money. I'm telling you that if you have slippage and you make 9 points on a trade, whereas it was 10 points of profit off a bar open, you made 9 points. And if your performance compared to the system is 90% of the system, if it's 90% of the system production, your performance today would have been 90% of 41.15, which is $3,700. Okay, so maybe you didn't hit the full boat on the system performance 7-2, but you're up 185 points. Samson, I would suggest that you have a conversation with Glenn at Infinity Futures about that. He can talk to you about commissions and fees and make sure that it's relevant to your specific account. Artem's saying if you have unfavorable slippage, 2 points away, I still think, Artem, you're getting too tied up on slippage. It really ends up not being a major factor. But just to honor your question here, doesn't it mean that my profit target is going to be 8 points by default? Yes. Your profit target, if you adjust to 10 points off the bar open, is going to be 8 points off of your open. But you can still lock in 5 points if it gets to 9 points of profit off of bar open. And Kendall is making the point that we've made frequently. Not all slippage is negative slippage. We love it when we get into a trade, there was a quick blip as we entered the trade and we had a point of positive slippage. And I'm still going to adjust my profit target to 10 points off of bar open, which means in that case, I might end up with 11 points of profit, whereas the system is recording 10 points. Michael is saying if the 5-minute CXA goes away, we do not close the trade. If the 5-minute CXA goes away and the 3-minute PBA goes away, you're going to close the trade. But you need them both to go away to close a Pb35 trade. All right, folks, I just want to say thank you for participating in this training. Thank you to those of you who have made the Aurora trading system part of your tool set. We're going to go ahead and close out session 2. We'll be back with session 3, where we're going to be talking about PB13s. Once again, don't forget that you have a list of items that will help you become a better trader. First of all, you can subscribe to the Aurora system. You can purchase a personal trading plan. You can get access to the trading education for Aurora. We're offering futures education if you need to understand a little bit more about futures at no charge. There's a fractal instructional video if you're not comfortable with your understanding of fractals, where we place stops. And there's a video that we put out there talking about how to use the Infinity Dome effectively, and there's a few other things here. So we've provided a ton of information. Our mission is to help you achieve whatever goal you have in your personal trading. So you should decide what you would like to make over the course of 12 months, download and use the personal trading plan to help plan for that. And then you track your trades every single day. and work towards that ultimate goal. So thank you for being here. Thank you for being part of our organization. Last question goes to Sad. I heard saying that session 5 is not open for the public. Yes, that's true. Session 5 is for paid subscribers. Sessions 1 through 4 are for anybody who wants to attend, people who might want to learn a little bit more about the system. But you'll know enough about the system in sessions 1 through 4 to know whether or not it's right for you. Plus, you've had an opportunity to be in the live trading room for 2 weeks without subscribing. So session 5 is restricted to paid subscribers. All right, thank you. Thank you, everybody. I'm going to go ahead and close out now, and we will be getting the recording of this session 2 out sometime, probably late morning tomorrow.